welcome to the final episode of After the After Hours with your boy TraderPrad. The final day of this week is tomorrow going to be a free fall Friday. Now get ready for tomorrow. Powell going on the microphone. Powell going on the microphone again. Get ready for tomorrow. So I do have a watch list ready, but if you guys are ready, hit that like and subscribe. Hit that like and subscribe. Thank you guys for all the love. Thank you guys for all the support. Started. Why don't we dive into the full screen and hit that like and subscribe. What is up, people? Let me turn the music down a little bit. All right, I was looking at some how to reply message, or was thinking about how to reply to this girl on Hinge, but that's a whole different story for later on. How are we doing, chat? We are now talking about the stock market. Let's talk about stocks. It's your boy TraderPrad. Hopefully you guys had a good day today. Obviously Papa Powell moved the market a little bit. You had the FOMC rate decision, a nothing burger move off the original rate decision, but then 2:30 when Powell actually started talking, you got a little bit of a move, and then a pop to the upside. The second Powell stopped talking, the market got slammed to the downside. So all over the place, I guess you could say, for the market. Some people are saying it's a bullish Fed report. Some people are saying it looks bearish. Some people obviously saying neutral. I guess that's the same thing. But what do I think about the FOMC that we just had? So quantitative tightening is getting reduced. That might mean quantitative easing is just right around the corner. I'm still a little confused as to, they said we're gonna have a 50-point rate cut at some point in this year and another 50-point rate cut sometime in 2026. So is that still in the same amount of rate cuts, just a little prolonged, or is that less amount of rate cuts than previously expected from the FOMC committee? So a little confused on that side. You could call this dovish. I mean, you do have JP Morgan coming out and saying it is a dovish report, but if it is dovish, then why did the market really not, rally the way it should have, in my opinion, right? It should have just absolutely ripped the faces off the shorts, insanely just ran the whole day, and not actually reversed back later on going into the close when Powell stopped talking. So kind of what's really going on in this market type of question. And tomorrow I guess we'll find out the answers for that. Originally off the open, it did look you got some good shorts off the open. Tesla did have a good bounce today off of its own news catalyst. They have a approval now to sell their, or not sell, test their auto driving in California, so that gave Tesla a little bounce. I'm mentioning that because yesterday I was so excited for a Tesla downside move, but Tesla did give you some opportunities. Apple gave you an insane long today, so trades were still there even though the market didn't really do too much before FOMC. You still had a bunch of trades today to take advantage of on the market, but I guess the real kind of fun started off that 2 o'clock 2:30 move for us to take advantage of BTC. Angry Buddha talking about BTC, that one for sure kind of had a pop today. So MicroStrategy moved back up to the north side. That's also on my watch list for tomorrow, always on my watch list, Bitcoin sector, right? So yeah, we'll talk about that one, but more importantly, we're gonna start off the day with my trades on the day, which wasn't so good. Sadly, that's the name of my or that's the story of my floor apparently, because we're all red. Maybe not all of us. I'm not sure if Dallas ended up being green on the day, but yeah, my whole trade floor was red on the day, sadly. Let's talk about myself though. Let's talk about my trades on the day. For the most part, my trades were C-size trades for C-level risk, and just kind of taking paper cuts everywhere and having a red day overall. So very easily could have avoided most of the paper cuts, but more importantly, even if the paper cuts were there, I think the main problem today was not sizing when the actual trade set up. For example, this Nvidia high-a-day breakout with the FOMC move, Shopify high-a-day breakout with the FOMC move, could have flipped long on S&P 500. I didn't flip long over there, so a couple misses overall. Not catching this long over here on Carvana maybe was a miss. However, that was a news move. Not catching this long over here on Reddit was a miss. I'll dive deeper into all these trades, but a quick little overview of my trades today. So let's dive in to, I guess, let's start with the losers, which I have a lot of. Carvana. I was looking for Carvana for this opening range breakdown, but no dice on that breakdown. Carvana actually bounces later on. Amazon comes out with the news that, hey, Carvana is going to or Amazon is going to get involved in the used car sale business, or they are looking into get involved in the used car sale business. So that actually takes the stock to the downside and breaks the level that I've been watching. So my alerts go off again. I'm watching the stock break the level and absolutely plummet, and now I'm watching it pop back into VWAP. Also, if you put an anchored VWAP from that news move, it's kind of right around this area. So once we reject the intraday VWAP, reject around the news VWAP, I'm looking for a continuation for a second leg down, which I really thought the stock could have, because if Amazon's looking to get into your business, it's never a good idea for you, especially for a company as expensive as Carvana is. If I remember correctly, Carvana was in the 2000 PE, but now it's like back in the normal PEs in the 100 PE, but still a very expensive stock at the end of the day. So that doesn't change the expensive or not expensive factor of the stock. Coming back to here, my trade, so looking for that short continuation, and I was looking to add on this breakdown over here. If that broke down, I would have really added to my trade, but sadly it didn't give me the breakdown. Instead, I got stopped out on a C-level size, so taking that quick little hit and moving on that trade. Next move hit is a SPY. So originally, like I said, I perceived the FOMC as a negative bearish kind of situation, You know, I thought they are now not giving as many rate cuts as previously expected, is what I thought, or at least that was the conversations that were being held in my office. So looking for the short over here on that catalyst, if that was the case, and then really looking to add on the breakdown of this area. No dice, getting stopped out. Should have been able to flip long somewhere here, or taken the long here on that breakout of 567. That was a miss. That would have given you a very quick long opportunity on the S&P 500 to capitalize on. So taking a little loss on FOMC trade there. SRPT, this is the SMB Capital setup. Not the setup that they actually alerted, or maybe they did, I wouldn't know because I don't pay for their services, but I used their setup to enter into this position, which is the 9 EMA crossing VWAP. So the 9 EMA cross VWAP after having a failed high and day breakdown. I could have cut the trade much quicker for a way smaller loss, but because of the setup rules and the amount of risk that I should have given on this name, based on that setup, I gave it that risk and took a nice little beating on that one too. SRPT. Reddit was looking for a high day breakout, but before that I was actually looking for this lower day breakdown. But because of the original move from 110 to 105 was so sharp, I needed some consolidation into this 105 area. So I was waiting patiently for some consolidation and a setup to get, you know, short, possibly a consolidation like this to get short into, but sadly no consolidation, and the stock just starts to rally to the upside, almost like it capitulated right off the opening drive, bottomed out, and just insane pop to the upside. Could have potentially taken the 2-minute candle high long and risked the lower day, and captured that big move to the upside, but I was, you know, bearish originally, so I think it was you know, hard to maybe flip a bias. At least it was for me. I was looking for the downside move, so wasn't even thinking about a potential long play coming into Reddit. But however, that long was beautiful, pushes into 112 area, which is also, I should say 113, 112 to 113 area, which is also the hourly resistance area. So if you look at the stock on the hourly chart, 113 was a level, so kind of flagging into the 113 on the intraday, looking for the breakout long, no dice, taking the flat exit, getting back in on the next time it actually has a failed breakout of this low. That's kind of where I should be getting long. I recognized it, but I said, you know what, I'll just take the breakout of the high day. I don't want to play no man's land. But that right there, when you spot this, that is the spot where you want to get long and risk that low, because that's basically a failed break of the range low, and buyers stepped right back in and they were aggressive, but then sellers took control right back again around this area. So fighting a seller and taking that beating the second time that I didn't take the first time. So market eventually learns to market eventually gives you the beating one way or the other. You think you escape it the first time, but it will eventually give you the beating if you are not behaving appropriately. QUBT, taking a little loss, tiny loss on this one, but I was sized enough for this to the point where if it worked out, this would have been a banger short for me on the day. Looking for that opening range breakdown. Very weak sector today going into tomorrow. Tomorrow obviously is the day one for quantum news sector, I guess. It's going to be the GTC, it's going to be the Nvidia conference, so lots of hype around the sector going into that conference, taking the stock higher. But today, yeah, no juice for it to the upside. So a lot of them were actually breaking their own intraday lows around this time, such as RGTI, IonQ, QBTS. All of them were breaking this intraday low except for QUBT. So I quickly ran to my desk, to my manager's desk over there, paid for the shorts, ran to my desk and was able to get short on the breakdown. It did give you 10 cents per share on that breakdown when I was barely even risking 10 cents per share. But on that pop back through, I started moving my stop higher and higher and higher just to give myself a little bit more variance. But sadly, that just, you know, made me lose 4 more pennies than I should have, which I'm okay with. You know, I wanted that a little bit more variance, but that pop right away was almost capitulatory pop, even though that expansion wasn't capitulatory. That volume and that pop right back was like in your face shorts, kind of slap in your face right there. Failed breakout low, exactly what you want to spot to get long, like I was saying earlier. SMCI was creating a little wedge over here, so I bid into the wedge looking to add on the break of the wedge, but the wedge eventually broke to the downside instead, and started to have some weakness on pops into VWAP, so I got out on those pops for a little tiny little loss. Just paper cuts everywhere, paper cut, paper cut, paper cut, paper cut. HQY, this one's interesting. Earnings name absolutely destroyed. Once again, has that failed breakout low, and I'm actually watching the tape. I'm studying the stock. I'm looking at the box, and the box is very bullish. As Lance says, that if the box is bullish, meaning if you're looking to short and the box looks bullish, don't enter the trade. Instead, what I did was I cut the order by almost, like, I cut the order to minimum lot size. So I made sure I don't have any size on this trade when I do get the entry. That way I have a starter trade over here, and then when it actually pushes back down lower, that's when I hammer the trade to the downside. No luck, I get stopped out on that. Later on, as the stock pushes back into the original opening range low, it starts to have some selling around that area again, so I dive back into that stock with a very tight stop. It was like a 10-cent stop around this area, so taking a tiny little hit on that one as it pushes back through to VWAP, but clearly very weak, potentially a name to keep an eye on going into tomorrow for some sort of a day 2 play. Is it on my watch list? No, but I don't think it's a bad name to keep an eye on based on how much it just got recently destroyed today. Apple, monster move on Apple. This was the breakout right here that you should have taken. When I say you, I'm talking to me. So missing that breakout long over here on Apple. What a monster move off that breakout. I was actually even preparing for you guys yesterday on stream for this level, but yeah, missing that one is regretting. Later on, trying to catch the falling knife, I thought because of how bullish the opening drive was on Apple, it should have an equally bullish bounce off of VWAP, but nope. I guess you know, FOMC was incoming, so stock getting sold off on the original pop, and then just trading sideways until FOMC, and then you get a little pop off of FOMC to the upside back again. So Apple taking a nice little one hit on that. Shopify, these were my only 2 winners today. Shopify and Nvidia. Taking that high day breakout after FOMC, giving me a quick little $1 per share scalp for risking maybe 50 cents per share. Nvidia similarly giving me $1.50 per share for risking about 50 cents per share. So decent trades over here. The problem with these trades are, like I mentioned earlier, not taking a good size on these, taking the same size on these trades as I did on all of these C level, well, not QUBT, I actually put good risk on that. QUBT, not QUBT again, Carvana, SMCI, SRPT, like RD, Reddit, all these stocks were just kind of like, you know, bullshit shots. But Nvidia and SHOP should have been a real shot. Sadly, I didn't give them the right risk, and that's why the redemption on the day was almost insignificant. So redemption on the day did not matter. It did make some money back, but it did not matter at all for that redemption. Solid guy and friend. I'm not your friend, guy. I'm not your guy, buddy. I'm not your buddy, friend. Hopefully you know where that's from. Oh, I can't type tenor. I'm so used to typing /tenor because that's what you type on Discord to have a GIF up. I'm not your friend, guy. There it is. I'm not your buddy, friend. I'm not your friend, guy. I'm not your guy, buddy. Friendo. I love this guy. Go check him out. Go follow him. He's an amazing dude. He's also getting into futures prop trading. I'm not sure if he's still doing that at the moment or if he's busy with his family stuff and you know, wedding stuff and so on. But if he is still doing that, you should go check him out. He posts some great content himself. Angry Buddha. All right, where are we? Let's come back to I already talked about my stocks on the day, so pretty regretting over there. But let's talk about some of the movers that might be interesting for tomorrow and hopefully not having a regretful day tomorrow. Friday is triple witching. Is it quad witching or is it triple witching? What is it called these days? I'm pretty sure it's called triple witching these days. Am I wrong on that one? Let me quickly go check this out. Come on, calendar. March 21st. The quarterly rebalance. There you go. Purple. Triple witching. So triple witching is, yeah, so it's not called quad witching anymore. It's called triple witching, and that will be happening on March of 21st. And the purple boxes are short interest dates. Will be interesting to see what stocks are going to get added to the S&P 500 index, what stocks are going to be removed from it. If I remember correctly, DoorDash was announced that it's going to get added to the index. That's going to be an interesting name. Actually, might even just throw DoorDash on my watch list for tomorrow, because if the market is bullish, I don't see why DoorDash doesn't get above these recent highs of what, 190, 250, and starts making that trek towards $200. The idea is, if you are a hedge fund manager and you promise that you promise returns such as S&P 500 or better, then you are obligated to have the same stocks at the same weightages as S&P 500 actually on Monday morning. So by Monday morning, if you don't have it, you are against the law and you can get sued for that. What in the world? What in the world? Who changed all these? Got distracted a little bit. My bad, chat. DoorDash will be very interesting because I think people will try to front run S&P 500 a little bit. If they can get prices before S&P 500 going into the rebalance, then they can, basically have a better average. They could have a better return compared to the S&P 500. So it will be very interesting to see how this S&P 500 add on DoorDash ends up being. I'm pretty sure it is getting added. I could be wrong. Let's go quickly check. Dash being added to SPY. There we go. March 7th, 2025. DoorDash pops as it gets a S&P 500 nod over these more volatile names. So what's getting removed? APP is getting removed. Coinbase didn't make the cut. So Coinbase didn't get into the S&P 500. Here are the stocks, I guess, that are being added, and no, these are how they moved on the day or today maybe. But what are the ones? 4 companies, new companies will be joining the index later this month. So DoorDash, TKO Group, that's UFC, okay. Williams-Sonoma, and Expand Energy Group. So EXE, WSM, TKO, and DoorDash, all of these will be entering the S&P 500. The companies that will be removed from the S&P 500 looks to be Interactive Brokers, okay, and AppLovin. Wait. These are just the ones that didn't meet the criteria, or met the criteria but didn't get added. So what's being removed, brother? There we go. BWA, TFX, Teleflex, Cleanse Corp, CE, and FMC are the ones getting removed. So if you're looking for short, these might be the names to just kind of CE might be interesting. Let's go take a look at on that chart. Need to move back up. Not that interesting. FX, BWA. Who is Praddo Norris? You don't know Lando Norris? Come on, dude. Lando Norris, the best Formula 1 driver right now. And guess what? He drives for McLaren. Come on, baby. McLaren, like my Lego. I'm pretty sure you guys have seen my Lego toy. Oh, wait. My face has not been on this whole time? Oh, wow. Alright, so Lego, baby. My Lego toy McLaren. I'm pretty sure you guys have seen it. McLaren is on top right now. McLaren is on top. Okay, let's get to the watch list, ladies and gentlemen. Not much there on the watch list today. I think on the earnings board we do have a little bit. Five Below, so let me put that one on the watch list too. I didn't even check the earnings board today. That's my fault. So let me put a couple more stocks over here on the watch. Pinduoduo tomorrow reporting pre-market. Along with Pinduoduo, we're gonna have to throw, obviously you know the names. Let's throw in a couple more boxes over here. It's gonna be Baba, Baidu, FUTU, TIGR. We're gonna look at FXI. So we got the China names over there. So earnings names. Oh, JBL. We gotta add JBL. Insert JBL over here. Anything else? Gamba. No, I'm joking. But that's about it. And tomorrow after hours, we got Micron, Nike, FedEx. So 3 good companies reporting after hours. Make sure to tune in on stream so you can read those reports with me. Right now, we're gonna quickly go read Five Below's earnings report using our good friends over at Benzinga. Check out Benzinga's link below in the description or in my about page, depending on where you're watching me. The discount link should be all over the place, easily accessible. If you're on YouTube, right down below. If you're on Twitter, you can go to my profile and it should say exactly where to click to get discounts. So check it out. You'll get discounts, not only Benzinga Pro but also all other softwares that I use daily to trade. Okay, Five Below reported today after hours. Let's take a looky at the report. Where is it? 1.391 versus 1.386, 3.48 versus 3.38, up 4% year over year. Comparable sales decreased by 3%. Operating income 246.8 in the fourth quarter. Opened 22 new stores, bringing locations up to 1,771 in the quarter. Company ended the period with 331.72 in cash and cash equivalents. It has been a busy 3 months at Five Below. We are executing our key strategies around product, value, and store experience, and doing so with sharpened focus on our core customer. The kid and the kid in all of us, said Winnie Park. What in the fuck does that mean? The kid and the kid in all of us, says Five Below CEO Winnie Park. Guidance: Five Below expects first quarter revenue to be in the range of 905 to 925 million, dropping quarter over quarter versus estimates of 898 million. However, they are above estimates by a little bit. Company anticipates first quarter adjusted earnings of 50 to 61 cents per share versus estimates of 49, so that's also up slightly. But quarter over quarter, I think that is also dropping. Wow, they just reported $3.48 and you're gonna drop it to 60 cents on the next quarter. That's all right. Five Below guidance for the full year. Company says 4.21 versus 4.3, 4.27 billion is the estimate, so kind of in range over there. The company expects full year adjusted earnings to be 4. 1 to 4.72 versus 5.06. That's a miss and kind of in range, but overall they did increase 4%. Comparable store, this means like same store sales decreased 3% year over year, so not really growing, you know, same stores sales. So but overall somehow they're still growing. Maybe that's like online retails that's kind of helping them out, not sure exactly, you know, but still 4% doesn't really excite me. But the stock market, like the earnings report, even though they guided lower, the stock ran up 8.1% at the time. So let's go. Company's guidance includes the expected impact of tariffs currently in place. Okay. Five Below expects executives will further discuss on a conference call at 4:30 p.m. Let's go take a look at the report, or sorry, the move on the stock. So clearly a pop. I'm deleting all my lines. Clearly a pop. I want to also see what Five Below's PE is. 15, not bad. 200-day moving average is around 92 at the moment. And that is a solid range if you look at it. Breaking out of, is that last week's high? Not really. Last week's high is up here around the 21 moving average, so that's around $82. I'm guessing the stock is actually around $82. Let's go take a look at the stock, and yes, so it got into last week's high, and you can see how it started trading around last week's high, and basically is using that as support at the moment. Also going into last month's low at the on this secondary push up into the after hours. I wouldn't say this is a big monster beat on the report. They're also guiding lower. They're also factoring in tariffs and everything, but the PE is fairly cheap. The stock has taken quite a bit of a beating recently with the rest of the market. They are below the 200-day moving average. So if investors want to buy up the stock, these are good prices for them, right? They're thinking about the 3-year, 5-year, 10 years. They're not thinking about tomorrow. So these are good prices for them, and you want to potentially be careful, you know, fighting against that buying pressure. If the stock does get into the 200-day moving average, it'll be a little hard to look long above it until the stock shows strength above the $92 area. But I don't think we get there tomorrow, and even if we do get there tomorrow, it might be a actual short for a good mean reversion, and then a long later on after that for day trades, right? So watching how the stock gets there. Looks like $100 was last month's high, and 84.50 was last month's low. So potentially we're gonna see the stock trade in this area tomorrow. I wouldn't be surprised with some boxed action in this area with the $4 ATR, with already, you know, taking $4 off a move in after hour over here. I think you might be getting like a $6 to $8 ATR tomorrow on this stock. So watching it, if the market's bullish, I think it's even more easy. I can't even speak English. If the market's bullish, I think it's easier to get long on the stock tomorrow, especially on dips. If we're somewhere in these ranges, I would love to get long on dips, and I would love to sell the rips into these areas. Sell the rips into 9900 and buy the dips into 84, 85. So that's the levels. Those are the areas I'm watching. But I already have some of the main inflection levels that I want to watch for, which is last week's high, last month's low mapped out. So pretty high importance, I guess, based on the pop over here. Although I am skeptical of this pop, but I'm not an analyst. I'm a trader. So if I get to trade around this area, you know, I'll look for some patterns to make decisions. Let me just quickly put in resistance. I don't think the stock gets above 100. Inflection level 84.50, which is last month's low. Support, which is around last week's high, which is 82.50, all the way up to $80. I think I can look long up to 80, but if the stock is not able to hold above 80, if stock not cap lock is on, if stock cannot hold 80, no longs for me. If stock holding above 84.50, I love long on dips. If stock around 99/100, mainly looking for mean reversion, but depends on how it gets there. Also, what I mean by that is if the stock slowly grinds into 9900 all day instead of just a straight one-shot move into 99, straight one-shot move into 100, then kind of like what Reddit did today. Where's my trades? Can we go back to my trades? If come on, where are you? If the stock does something like this, but the inverse, if it you know, pops all the way up to 99, 100 right off the open, then I like the short off there. But if it slowly gets up there and just grinds there all day, this is actually Carvana, it's not even Reddit, but if it slowly just grinds there and slowly gets up there, then I'm not really that interested on the short. Also, whatever happened to these ladies on FOMC? These ladies were missing, man. Like, this is the only reason I actually watch the FOMC. You think I care about what these old farts have to talk about interest rates and inflation and real questions about the market? No, I don't care about this garbage. I care about looking at Gina. I think her name's Gina. Holy shit, what's going on over here? What the? Oh, people are crazy, bro. Like, why ruin other people's cars? Is that like a dealership? That's probably at a dealership, right? But like, people are absolutely wild. The amount of death threats this guy probably gets right now is so sad. All he's trying to do is, you know, help the world, in my opinion, and people are just absolutely savages. Coming back to the stock market, you get the idea on Five Below now. Let's go to JBL, the next stock on my watch. Ooh, holding right around the 200-day moving average at the moment. Looks like last week's high is already we're already above last week's high, and we're trying to get above some of other levels over here that might be interesting. So JBL reports earnings tomorrow pre-market. On a negative report, it potentially gets below the 200-day moving average, at which point that also gets interesting for a trade. And on a positive report, I think you don't even get a chance to play in this area. It might just pop up. So watching how JBL sets up tomorrow for sure. Other stocks that are also reporting tomorrow, it is in the China sector. Pinduoduo already have some levels mapped out for myself. If you want to take a quick little snapshot of these levels, it's these recent highs: 133, 131, 124. So watching how the stock reacts. I think today China sector was a little weak. Baba, Baidu, they all were weak. Baidu got up below 100. But the Pinduoduo, I think, has exposure to AI. I'm not sure if they actually do, don't quote me, but what I do know they have exposure to is you know, the whole world through Temu. So Temu is a Pinduoduo product, and obviously you guys know what Temu is. I don't need to tell you about it. And this stock is Temu, off their last report, actually didn't help them as much as I thought it would, but we'll see if it's gonna change now and potentially give them that oomph to break that 133.33 barrier on Pinduoduo, in which case I think you can look for other stocks in the sector, Baidu, Baba, all of them potentially giving you some sort of a trade opportunity. FXI at the moment having an inside day, so if FXI breaks that low, potentially because Pinduoduo didn't really report well, and I think the rest of the sector is also selling off a little bit if that happens. So you cannot trade, in my opinion, the Chinese sector without keeping an eye on FXI or any of these ETFs. I think Ying and Yang are two ETFs, YINN, which is a 3 times bull ETF. YANG is the 3 times bear ETF. You can keep an eye on these, but I just watch FXI. This is your large cap China ETF. In my opinion, this is the more important ETF. Just keep an eye on this. If this is below yesterday's low, below today's low, it's basically no longs for me on the sector. I might give the Pinduoduo's earnings report a little importance, depends on how good or how bad the report is, because that might have a secular move compared to its sector, but still important to keep an eye on FXI. Along with Baba, Baidu, you have FUTU and TIGR, which is TIGR, which are always, TIGR still holding? Really interesting. $10 kind of rejected and pushed right back up, but still above $9. This stock looks like it wants to trap some people, so maybe TIGR is actually a high priority if the Chinese sector is actually in play tomorrow. So keep an eye on TIGR, because this one might do some fun above $10. It's a 65-cent ATR stock, but right here, this day's low was $8.11 and high was $10. Okay, so that's more than 60-cent ATR. So I'm very interested to see what this can do above 10. Inflection level 10, resistance 10. If stock can get above 10 and stay strong, things can get fun. So watching this one without a doubt. DoorDash, I said a high priority on this one. If you actually go to the hourly chart, turn off that bad boy right there. I think this is where you'll kind of see the level that I'm talking about. What is that? 192.50. So if the stock basically gets above 192.50, which is last Thursday's low high, sorry, last Thursday? That's last Thursday. 2 Thursdays ago, this kind of range consolidation high, if it gets above it, I want to look at that low too. You got a double bottom over there before the breakdown, and then it's pop up. This looks like a nice inverse bouncy ball before we get up to the north side, so I want to have that one on my watch too. But right there, if we get above 192.50 tomorrow, I think it is an automatic long for me. If stock can get above 192.50 tomorrow, it is an auto long, and look for all dips to buy. Stock is getting added into 500. If not, holding above 192.50, no trade. I was gonna say look short, but I'm just gonna say no trade, because I don't really want to be fighting a stock who is getting added to the S&P 500. This trade will be 10 times better for me if the market is actually bullish tomorrow. So keeping an eye on this bad boy. Shopify had a good day today. I'm not sure what the news catalyst. Oh yeah, the Shopify is actually getting ported over to NASDAQ. They're pulling the Palantir move. They're moving away from New York NYSE, and they're going into the NASDAQ market. Potentially this will allow Shopify to be included into the NASDAQ 100 the same way Palantir kind of did. They were in the S&P 500, and then they did the switch over, then they got added to the NASDAQ 100. So did they get added to the NASDAQ 100? I think they did, but you get the overall idea. So I think Shopify trying to copy them over here a little bit, and that obviously giving them a nice bounce to the upside, taking out the previous last week high. That's Wednesday, that's Friday. So yeah, taking out the last week high right there and having some momentum behind it could give you a day 2 trade tomorrow, but not sure if it's that high of a priority. That's what I'm debating with. Good volume spike today. Good volume spike for sure. I guess you're playing under over 100. If the stock is staying strong above $100, you can continue looking long. I think there's nothing wrong with that at that point. But if it's getting below 100 and no buyers are stepping in to defend that $100 area, then you don't really want to be thinking long on this name. So I'm just gonna put in under over 100 in my notes for the stock. And look at that, just as we're talking about the stock, it is next up on the watch list, Palantir. Palantir at the moment, I think, is a nothing burger for me until it really gets above this $90, $90.50 area. So I'm gonna just put that on my resistance zone and move on from this trade. I put Shopify 100 as resistance. Let me put that in the inflection box. I think I should bring this here so you guys can see. This here. Then I can have my Discord up over here. Holy shit, I have so many messages. Oh my god. Okay. It is huge, chat. Okay, Shopify, Palantir. Talking about Palantir here. 90.50 is going to be the resistance. Until it gets above it, I don't think I really want to be doing anything on this name. But I'll keep an eye on it. It's an everyday watch name for me, like Nvidia, Tesla, and so on. You have what do you call this stock? SMCI. Today they announced some new coolers with Nvidia Blackwell chip and so on, basically creating news. So because of the yesterday's move where they got sold off because they weren't involved in the conference at all or being mentioned in the conference at all, so they kind of put themselves in there by putting their name in the basket. It's a little bit of a cheap trick maybe if you ask me, but hey, it's SMCI. It's an AI name, it's a server name, it's a semiconductor name, it's a hardware name, so worth keeping an eye on, and they're no longer a fraud now apparently. So a little trend has been formed. Again, you can see how this low, these lows, they're kind of holding, not like a line in the sand that someone has to buy it and it's a short as soon as it breaks. No, I respect horizontal lines more always than trend lines. But there could be a short from that trend line break into this horizontal line, right? So that's about a $5 move there if it actually comes into play. Today it did look like it was gonna give you a long, which you saw me try to take, and it didn't really work out. Continue to keep an eye on this name. Good news today. I might not have a good news tomorrow. ADTX, not sure what is wrong with this stock. What kind of crack is the stock smoking at the moment? But it is absolutely blast off territory. So, nice little breakout of this range. Get rid of some things over there. Nice little breakout of this pre-split, post-split range over here, and potentially some more activity. The longer the stock holds above $9, the more activity I think it sees up north. So keep an eye on ADTX. Just one of those trappy, scammy stocks that you want to be careful for. I think it's a small cap, right? Pretty sure it's a small cap. X. No info, 10 million market cap, so small cap basically, and yeah, we'll be very interested to see how this one sets up. Potential short squeeze to the upside. I don't even know what float this one. Short squeeze to the upside. Triple and index rebalancing quad, yes sir. Prad, which one you like the best, and aren't they up big in after hours if the news? I'm not sure what you're talking about there, Michael. Oh, since he doesn't drive for Ferrari, I wouldn't know him. What? How's Ferrari doing right now, buddy? Huh? 10th and 9th? Is that what they got? 8th and 9th? 10th and 9th? However, you know, one of my favorite drivers ever, Lewis Hamilton, does drive for them now, sadly. Spring will arrive at 5:01 a.m. Thursday. It was hot today, boy. It was Thursday. No, it's Tuesday? What day is it today? Wednesday? Wednesday, March 19th, and it was 19 degrees Celsius hot today. It was hot. But I'm not complaining. I'm not complaining at all. Okay, come back to the market. ADTX. Keep an eye on that one. I'll mark it orange a little bit. Tomorrow being the quantum sector, obviously this whole basket of name will be very important. So you're gonna have to potentially do some charting for yourself, because you know my charting obviously is enough, but you also want to be prepared for these moves. QBTS, a lot of them look alike, but some of them are you know, in their own little patterns also. For example, RGTI and IonQ are kind of in their own little patterns, but then you have ARQQ and LAES who you know look a little similar. Then you have QBTS and QUBT. Then you have QMCO, QMCO. So lots of names over here. It all comes down to what name actually gets talked about through the conference, what partnerships are announced, what type of innovative technology is being declared. You know, we already had Microsoft come out and talk about how that one quantum chip that they designed took them, what, 17 years to design, and all kinds of crazy stuff, and how that one chip can now solve all world's problems or something like that. So if that's the case, then let's see it. Let's see the conference come into play, and let's see what stocks are going to be talked about. We kind of have a clue already that QBTS, which is D-Wave, is going to be hosting a little bit. So we have a little clues here and there. If you go to NVIDIA's website for the GTC conference, you can actually retrieve a list of stocks and companies that are going to be you know, hosted or talked, will be talking. So IonQ is another one. IonQ has a solid level here, in my opinion, above 2550. If it gets above 2550, there could be a long over there off of that conference catalyst. So just map out these levels, map out these stocks. I have them all on my chart at the moment, so I'm not sure I really need to even individually pack all of these levels on these stocks for me. There's just too many of these quantum names. So it all comes down to which one has the most volume, which one has the best liquidity, which one gives me the best setup to trade off of, and you know, a couple other variables here and there, which will all come down to the last second option for me to pick which battle I'm going to pick to fight. So I'm going to leave it on that note for the quantum sector. So make sure that you're doing your homework too if you're trading these stocks. Now we have the large cap sector, which is Nvidia, Tesla, and so on. Tesla, let's start with Tesla. Tesla had a good news, which is basically, you know, California, and that allows them to go test their autonomous cars, which is actually very good news. And if it actually ends up being a good thing, you know, they're going to be rivaled with Waymo, with a bunch of other companies out there too. I'm not sure what the other one. Waymo and WeRide. I think WeRide is Chinese though, don't quote me. Anyways, Tesla, I think, should push back into the last week's high ranges if the market's bullish. But if the market's not bullish, then, you know, we potentially see Tesla going right back into last week's low area. So a nice box range forming within last week's high and last week's low, and you're just playing the box. You have a midpoint of that box too, where you can play around. Honestly, if you go into the 5-minute chart, you can see how that midpoint comes into play quite a bit today. So right here, is that midpoint, and you can see how we go back and forth between yesterday's high and the midpoint area, and then eventually break out of the midpoint area and then pull back and hold around the midpoint area too. So we do trade around this area quite a bit. Very important level right there to keep an eye on, around $230 for TSLA. Watching this stock for sure. I mean, it's an everyday watch, right? These names that have insane ATRs, doing insane volumes, they're always on the watch for me because they can just give you a quick, easy scalp pattern on the back of the market, on the back of some news, and capitalize on it. Apple had a very strong move to the upside, but that got slammed right back down. In my opinion, as long as Apple's above 215, you can continue looking long. So that is the main inflection level for me on Apple. If below 215 again, there is really no longs on that one. Amazon did have a failed breakdown of 190, but this box is not really something I want to trade between. So you know, it's a no man's land. On the daily chart, I'd much rather just wait at the low of the ranges or at the high of the ranges. The high of the range is basically 200. It's either we break 200 and get above it, or we get into 200 and we reject for a short. Same idea, vice versa on the 190 to the downside. Meta is not something really a stock that I trade because of its liquidity. Only 20 million shares traded for a stock that's $600. You have 300 million shares traded on Nvidia and on Tesla every single day, so it's a very illiquid name here on Meta. Not something that I actually look to trade, but opportunities are here. If there is a strong name in the Magnificent Seven out of the whole seven, I think Meta is that one, because all of them actually are under the 200-day moving average except for one. Right? Meta is the only one. Let's actually go confirm. Meta is above 200-day moving average. Google below the 200-day moving average. Nvidia below the 200-day moving average. Microsoft below the 200-day. Apple below the 200-day. And Amazon below the 200-day. So Meta is the only one that's above the 200-day at the moment. And let's say the market correction is done. What is the stock that was strong during the correction going to do when the correction is done? You can answer that question yourself. So if there is a bounce back up on the market, this might be the one to really keep an eye on, because this could make some leaps and bounds to the upside that people might not even think about, right? The strongest name out there, doesn't hurt to keep an eye on. Bitcoin does have a pop, so MicroStrategy pops right back up. Light volume still below the 20-day moving average, but picking up on volume, which is a good thing. Let's see if MicroStrategy can get a little bit more activated. If Bitcoin can get back to the 90k plus areas, that's going to be very important. I'm going to sneeze. I don't have to sneeze. Okay. Okay, Robinhood looking bullish over here. Obviously, if Bitcoin goes up, Robinhood is always a good name to keep an eye on. So that one's moving higher. Not really sure what I want to do with Robinhood, but it doesn't hurt to keep an eye on another name in the sector. Coinbase, I'm very interested on that breakdown, but that breakdown getting saved by the bell, I guess you could say, because Bitcoin basically giving Coinbase that pop up to the north side. But I'm still waiting patiently for that slam down on Coinbase, because I want to really throw down. I already have an alert set for that play. If it comes into fruition, I want to absolutely slam that breakdown. What is that? 176.86, 176.80 area / 177 is what I want to keep an eye on. Whenever it sets up, I just want to slam the crap out of that trade. All right. I bet, yeah, you're supposed to be there. Last but not least, the overall market. So FOMC, did have a kind of a bullish reaction, right? Market did close green, a little bit of a bullish reaction on what seems to be a bearish market. I think that the original terminology is if the market's down 10%, we're in a bear market. Market was down 13% from all-time highs, so officially in a bear market. The question is this a dead cat's bounce, or is this the bottom and then now we push back up north and kickstart the next great rally on the stock market? So for those of you who don't know what a dead cat bounce is, you just Google it. Dead cat bounce basically looks like this, where the market's going down, you have a little bit of a bounce, investors get long here, thinking that that is the bottom. This is actually a better chart, right? Market ripping, it drops, it has a little bit of a bounce, usually like a cat bounces anytime it jumps off of a very high floor. But as a dead cat, the bounce should not have any real bounce, real momentum to it. It should get pulled right back to the downside with gravity. And as buyers get trapped in this area, you're getting that break of that support and you know, a realization, oh my god, this is not the bottom, we're gonna go even more lower, I don't want to lose all my money, and people start dumping their positions that they bought in this area, all of it to the downside we go again. So that's going to be the question. Does it actually start getting back above the 200-day moving average, or does it stay below the 200-day moving average and then start breaking out this lows? And is it really a dead cat bounce? So wait and see, only time will tell. We did have FOMC today, which apparently is bullish and dovish. I guess bullish and dovish means the same thing, but it is bullish, it is dovish. So if that's the case, you know, might just be the bottom on the market. Might just be the bottom on the market. I'm not a fortune teller, unluckily, so I can't tell you if this is the bottom or not. I'm just a day trader, so for me it'll just be important to see if the market can get above this 485 area. If QQQ shows me strength above 485, I'm interested in longs only. But if QQQ is still struggling into 485, it's going to be pretty hard for me to look long on anything, on the tech sector, on the overall markets itself. So it's very dependent on how the markets react on day 2, on day 3, and so on. And keep in mind, we got triple witching, right? It is possible markets do nothing going into the triple witching, and then they actually see what happens after the S&P 500 rebalances their books and their portfolios. Last but not least, before I end the stream here, let's quickly go take a look at two things, such as the IPO calendar. Nothing really here for us to take a look at, sadly. And the last thing is the econ calendar. So tomorrow we do have some important things coming out. The 830 number, continuous jobless claim, so that's going to move the market potentially. If it comes out a big surprise. If it's in line, then maybe nothing. So to 830 you have initial jobless claims, and then you have existing home sales at 10 o'clock, and then you have the 10-year bond auction, tips auction at 1 o'clock. So couple events that could potentially, you know, shake the market up, but most importantly looks like to be the 830 number. And that, ladies and gentlemen, is all she wrote for today's episode. Hopefully you found something just duck over there. Right there, you see right above my head, my little Formula 1 Lego car. That's right, baby. They're gonna win this year's drivers, constructors, that's what it is, constructors and drivers championship. And my money's on Lando Norris, or sorry, I should say Praddo Norris. Hopefully you guys found some levels to trade off of for tomorrow. We do have some fun earnings names coming out tomorrow: Micron, FedEx, Nike. So if you're interested in those, make sure to tune in to stream 8 o'clock, and we'll be reading all the earnings details live on stream. All the discounts right down below in the description. The stream was sponsored by Benzinga, Trade Ideas, TraderSync, and Flash Research. See you guys tomorrow. get destroyed. Get ready for trade off of. Get ready for the watch list for tomorrow, ladies and gentlemen. So I'm gonna bring in my big screen over here, back to another brand new week of After the After Hours with your host Trader Prad. I'm doing great. Hopefully you guys are joining me on that great side. Markets are moving around. Might just be a risk on type of day, so let's see what happens. 8 o'clock tomorrow. As you guys know, we do the stream Monday to Thursday, 8 p.m. Shout out to my affiliate sponsors, Benzinga, Trade Ideas, the #1 scanner to go to, Trader Sync, promo code down below, promo code PRAD15 to get 15% off. I will catch you guys tomorrow, 8 o'clock, same time, same place. Until then, Trader Prad out. Adios.